issues. There we go. All right. So I sent a note out today. I mean, I think you should just close the Russell put spread. Just close it, you know. Now you have the call for credit, big credit. I thought about this call. This was the call in the month that it had. I thought that most you could probably get 55 for it. At this point, I think we just take it. So that's the note I sent out. I mean, depending on where you float an offer in for this, right? You can probably do a little better than that, but that I don't care. I don't mind marking it right there. But I think you could do much better buying the put spread back. But as far as the SL goes, again, I still want something with gamma. So UVXY, we just want to find a, right? We have a little bake off here. Honestly, I don't expect it to last, although this one here could have worked a little better. It's a little aggravating. Going to show a little bit more patience with this. So if we look at Jan 29, and we go 50, 60, 70. Right. Use the fact that we're having, you know, massive moves here. And this is, you know, you're going to get something on this. I think you're going to have to pay like $1 for it, though. Right? So that's 80 deltas. But here, again, if the trend for vol reverses, which is possible, okay, it's totally possible. Okay. You buy one of these guys. I could even scooch this up a little bit and buy like a 45. It's funny, I got a different delta picture. Whoops. There we go. Little flatter. And again, if you get even a rip to 50, you know, you're starting. You can start peeling off flies if you want it. But the idea is if you get, you know, if we get like a rip back to, you know, right, we actually really climb here. And let's just look again. Look at where UVXY has come from, right? It was 38 only a couple days ago. So you're banking on the fact that this thing moves, but when it moves, you make sure you want to give them some. Right. So anything adding to the strategy ladder would be something like that. I like the idea of this USO strangle. I think I'm going to bid for this a little bit myself, and then I'll see if there's anything I could buy stock-wise against it at some point. But it's just, it's very cheap gamma for what is going on. It's like, I don't want to get long the market here. And I don't want to sell a lot of juice here. And that's what we got, I think, huh? Anybody have any thoughts, questions, anything like that? Try for a buck. Ken. Buck, buck 04, buck 05, something like that. So again, you try to execute the call, put call fly first and then the put. Um, seems like the whole rally's fading again. Aye, aye, aye. Freeport McMoran. It's hard to believe these companies are just totally, they're just going out of business. Yep. In FCX, do they have an oil part? I thought they did, right? Hmm. Revenues reflect oil and gas operations revenue segment decrease of 85%. Oh. So why are they killing this thing when all the rest of the oil stuff's rallying? Yeah, I know. I mean, and copper prices are at lows, but which options, Adam? Oh, I don't know what the story is on it. Let's see what the paper's doing anyway. Selling calls, selling puts. Somebody's selling the Feb 3 puts. Hmm. All right, this isn't a good sign. Rigs down on the day with oil up on the day. That's not very good. All right, I think we have just a couple strategy letter things to go through. So let's go. I'm just going to look at UVX. It's what we'd like to try as an idea. Something along these lines. You're looking for about $1 for the fly. It looks like bid $1, maybe $1.05. And if you get filled, look for a longer term put because you're going to need more time for that put to kick in. The 43 put for 480 looks fine.
Even as CIO, I don't have the password to get it to install software.
So this is going to look more like this. Okay. The second thing I would do is just buying some juice and oil until all this stuff subsides.
Yeah, I don't hate the idea of like a little butterfly or something like that in USO. You know, long meat, short the wings.
Something like that.
With all, yeah, with all still here.
Yeah, I was looking at just like a strangle or something too.
And that's not a terrible idea. Although I think you want to have some sort of short curvature around it. Don't you think?
Yeah.
If we can price that one. I'm just let me hold on here. Yep, we could do that. Let's see here. 0 1 2 2 2016. Go. All right. So if you bought the, let's see, Jan 29, I think it's a little old. I think we looked at what, Feb, like a Feb 9. Let me see what I looked at here. I'm sure.
Long the 9, short the 8s and 10s, something
yeah,
like
but
that.
It would be different, Nick. It'd be the other way around.
Mm-hmm.
I'm learning my lesson on that one. I just want to own stuff. So if you bought the 9, let's see here. So it's going to cost us, well, the 9 straddle is going to cost us 94 cents and we take in a quarter. So that's, well, it doesn't price that great. I have to be honest. I would just rather buy, honestly, I'd just rather buy like a 9 put and a 9.5 call and let it go to where it's going to go. Just fade this rally. I don't know. It's trying to give back the gains.
I think it's just the 11:30 close of Europe. You know, we always get a little fade here. I'm not sure that we're going to have that same tank job that we had yesterday, especially with the fact that they were unable to kind of sell into it on the open. I think that was very telling to me in terms of kind of how the market was acting. I'm not sure that we're going to have like a huge long-term rally, but I'm not surprised that we're getting a little soft into the European close. I'd be worried if we were rallying into that close, actually. The other piece is American Express is getting destroyed today. I don't know if you saw AXP, Andrew.
I just saw they had earnings issues or whatever.
If you're wondering why the Dow sucks, take a look. AXP's down 11%.
That didn't work.
So
So
they are GE off a little bit too. So a couple Dow stocks affecting the Dow Jones, which is why nobody, the fact that two stocks can make it underperform by 50%, part of the reason why a lot of people don't pay attention to it.
Well, you and I can do this. I mean,
But that's kind of what
James
what my interpretation is. But who knows? We're 10 handles off the high. Still not getting a lot of rally in VIX. What's the low in VIX today?
23 and change, like 23 half.
Well, we had a little print of 22.93, but really, let me just look at a tip chart here.
I guess so, 22.93.
Yeah, that's not real, probably. Yeah, that was just a weird opening print. The real low is 23.15, call it. So there was like an opening bar that touched 23.93, and the next bar is right back up to. So we'll call 23.15 the low. So it's not like the vol guys are just completely giving it up, but it's off kind of what one might expect, and then been threatening between contango, and I mean certainly the curve is flat as it's going to get. So it's just interesting to watch. Maybe we do give some of this away, but it definitely feels like all that Fed stuff. Do they have a meeting next week, right, Andrew?
Well, there's non-farm payrolls. I think there's another meeting next week, but there's
non-farm payrolls aren't for 2 weeks.
What's today? Oh, yeah, maybe it is the Fed next week. What are they going to do? There's nothing they can say anymore. I mean, we might catch a little vol bid for it, but
I think that what the market is expecting. I mean, if they think they're raising rates 4 times this year, they are smoking crack. They're not removing.
No more.
Yeah.
I don't see that either. I think it's going to be
maybe back into the year.
Yeah.
Maybe back of the year if oil stabilizes, but they shouldn't have raised rates in the first place, and now they're definitely not going to raise rates next week. So it'll be interesting to see what their approach is and how they handle this stuff.
There's no more QE ammunition. At some point,
there's no more QE ammunition.
They just have to start paying back their debts, and that's it.
Right.
The world just tugs along.
Well, right, but the point is that they're not doing QE, but there's no reason there's no reason to raise rates with everybody else engaging in quantitative easing.
Right.
So, but the fact that they're not executing QE will inherently mute inflation, and that's the part that for how smart these academics are, the fact that they're unable to see that is shocking. Oh wait, everybody's killing their currency, and the dollar is rallying against every other currency in the world. But we think there might be inflation. Are you frickin' high? I mean, how does that add up? In what way, shape, or form? So, that's the whole point. What they should have come out and said is, we feel we could raise rates whenever we want. We're going to sit on it until other governments quit engaging in easing, and then once worldwide easing ends, we will begin a tightening process. And that would have been the smart way to approach it. And that's what they're going to have to do now. I don't know what. Tell me if I'm saying any.
Telling tales out of school.
Yeah, tell me if any of that doesn't make any sense. What quote did I just say that was good, Susan? I wasn't even paying. I didn't think
too logical for the Fed.
Yeah. So Oh, what are they freaking high? I'm just impressed I didn't drop an F-bomb there.
You were
Um,
close.
but if you look, I mean, they're absolutely. I mean, for only being up 1%, the fact that they're doing a nice number on implied volatility, um, and the futures themselves are down nicely. Um, we're about where we traded kind of all last night, and so like I said, I think we're going to soften into the European close, and then who knows from there. This is a period of time where I find trying to predict where the market is going to go a bit of a fruitless labor.
A fruitless labor. I like it.
Yes. Can you tell I've been working on my book based on my increase in vocabulary?
Yes. But
You were looking at setting up a long-term put play in UVXY?
no, just what I wanted is I was looking at some shorter term call flies in here,
Mm-hmm.
and a put, like buying the put fly in here, like the 50, 60, 70 fly in Jan.
Well, that would be a call fly.
That's a call fly, and then against that, I buy a Feb put to hedge in case they really do, and in case they really do, uh, and in case this is the end of the vol, which is possible.
I mean, I don't know that it's the end of the vol completely, but it certainly feels like we may have a little bit of a vol lull, if you will. We've had so much of it lately. What do you call it when you get kind of volatility exhaustion, Andrew?
Fatigue.
Yeah, it feels like maybe that's where we're at. It's some volatility fatigue. And we're going to maybe take a little dip down toward 20 again before it's all said and done.
Yeah, I think if oil starts to fall apart again, we're going to be right back where we were. So.
Yeah, I mean, I don't know. I mean, yeah, to some degree. I don't know that it doesn't look like. I mean, if you look at the way they're taking down oil vol, I think oil is now in the $29 to $34 range for the next 2 months, maybe 30, maybe 30 to 35.
Oh, okay.
It's had that big move. I'm not, it may be, how oil gravitated between kind of 40 and 45 for a good 2 or 3 months after getting kind of ripped into. Maybe we're in kind of that 30 to 35 range where it starts just kind of trading around those levels for the time being.
I guess it could.
I just don't. That was if you look at where pull up the blog post. Pull up a picture of oil volatility from, on Live. I'll pull up USO and then pull up the, or OVX is fine too. Just pull up a chart of OVX and put on like a 1 day and go out to like 2 years.
I would if it would let me. Oh, there we go.
All right, and now go out to like 2 years, and we hit levels of panic that we kind of saw the last time. Well, pull up USO because it's nice to be able to see vol versus an underline. All right, and then just stretch out below, stretch out that and pull up IV30. And you can see we hit essentially panic levels that we saw in February of last year. Okay.
Higher.
Right. We hit some like serious panic levels that point toward some level of oil capitulation, let's just say. And, the last time we kind of popped like this, oil found some stabilization for a little bit, and volatility started to ease off, and that's the way it feels like it's acting now.
Right.
We're getting a little bit of an easing off the pedal. Even if it's range bound, like I'm not predicting any huge rallies.
Right.
But it does feel like we're pulling off we're off the pedal.
Okay.
The guys that are like day traders and think there's easy money shorting oil are probably out of it at this juncture.
So maybe for the UVXY idea, we just buy less call flies.
I think that makes some sense because I think you've got a shot at UVXY breaking 40 by Tuesday. If we come in Monday and things are still okay, UVXY is going to be back below 40 in a snap.
Right. So why don't we do 2? So the ratio we can, if you're a little more bearish or whatever, you could do 5 or more. 5 is probably the most for the put, but 2 now you're going to actually be, I believe, at 2.
They just did a dump job on volatility again. They came right back in and sold premium, vol premium.
So a 2 lot is it's a short that gets you short vol. Let's make it 3. 3.6. There we go. Again, wait to get a good price on the fly. Buck, Don't spend a bunch of money on it. And so I could split the difference with you on that. So we got buying Jan, fly, buying Feb, and let's do some complex. There we go. Again, if anything happens next week, we're going to have upside performance. All right.
Oh wow, yeah. Look at this.
Okay. And
somebody just clicked the buy button again. And the absolutely just crush volatility premium button. No, they're not. They have the mullet on. 1 by no, they're 1 by 1. No, I was texting with them today. I will look.
Alrighty. Now we can run through the strategy letter so I can get ready for our pro chat.
We murdered more than March.
Even
if it's 2 by 1, which I'm not sure it is.
Don't forget we've got our hedge out to February here, which the hedge is up money, it's helping, but it's the same thing. If we do get this whatever oil recovery, maybe AMJ gets back to 28, we can start writing calls again, right? But we made the decision to
has a lot more work to do than mine.
Stop ourselves out. CMG I think is dropping today. So why don't we just take the money, sell our fly, and be done? You could hold on to it, but we made money on both legs, and that's certainly good enough, right?
CMG is boy, what a mess that stock is.
All right, you can keep the fly on if you want. It's up to you, but we'll just take the profits in it and move on. Okay?
Oh, but we have such fresh ingredients. It's 9,000 calories and it'll give you Ebola, but it's fresh 9,000 calories with Ebola. It's not processed 9,000 calories in Ebola.
The good thing is with all the talk from Mario Draghi, our 104 puts are going to expire worthless. Paid for the call, and now are these 104 puts we can start looking to roll against them next week. So you got to love the QE talk. So the FXE will be up a little bit, CMG will be up a little bit, AMJ will be up a little bit. GLD,
Love it.
I'm just going to close the trade today. Dollar's still rallying. This is just done now. We didn't get anything out of it. It's down about 140 bucks. Our Goldman call is going to go out worthless. Again, we were stopped out in February against Rig, and now we're just buying time. If oil recovers, we could actually get back to where we were. We burned some money on puts, but we did roll them. But when everything goes against you, you have to have your stop points, and that was our stop point. So TLT puts, keeping the long calls would have made us a little more money.
Yeah, a little more, but those have a chance. Oh no, those expire today.
Yeah, so
we
all
made
this
some
is
money.
just
We made
legacy.
some money on the trade.
Yeah, we made money on the trade. I could have held on to the calls a little longer.
Yeah.
And the UVXY put against the flies is going to end up being down about $100. Not great. Although today we're making money pretty much in everything, so that's good.
Yeah, no, it's a nice day. Everyone's happy.
CMG, like I said, well, I'll put a note out to close that. We're going to add the UVXY, $1 only for the fly, 3 lots versus the put. Same thing, we're still looking for movement. Either the oil thing holds up or it doesn't. And we explored some ideas on, you can buy those junky USO puts and maybe buy some of these names. I think I'm going to go look into that a little more for myself today. So I kind of like that idea, to be honest.
Nice little crush job.
And what?
In you name it.
Yeah. So I think, again, you got that press down here. I think you certainly be able to buy call flies. And, you get any rally to 50, to 51, 52, you're going to be selling those and making, and you're going to be paying for your put. But right now, this is the third day from peak to trough of volatility drop, by the way.
Yeah, I mean, really, there's definitely been a little bit of some suction, if you will, of volatility. They're just absolutely murdering American Express. It is down 12% now.
That ain't it. Also, too, and in Russell, we closed the Russell. Mark, I just closed the put spread on the rally. It was up.
Oh, you did?
Well, it's up anywhere between $200 and $300, depending on where you could close it.
And how was our little call?
I'm just going to keep the call, and we'll see what to do with it tomorrow or Monday. Because if we do get a little pitch up in vol, I'll just sell the call out, or we go and we sell a new Russell put spread. It's just when we haven't been harvesting gains, it's been no bueno for us. So I'm going to take it when they give it to us. All right. Let's see, what can we do here? Wow. I don't like this.
Yeah, I mean, we're sitting here now, Andrew, and so with the SPOOs moving a total of 3 points, they've taken they've taken 40 cents out of the VIX. I think we could see a 22 handle on VIX by the end of the day. The way they're trading it, and
that would not disappoint me.
I would no, and
I can't be disappointed.
No, it feels like they really wanna do. I mean, if you look at the Russell 2000, that is the longer we kind of sit here, the more vol will come out, and VVIX will come out in particular. I mean, they're definitely taking as much as VIX is down. The volatility of VIX is in a lot. I mean, it's threatening to break 100.
Oh, really?
Yeah.
There's a psychological barrier for you.
Yeah. So it's interesting.
All right. Release the hounds.
So, yeah, this is pretty phenomenal. Shockingly phenomenal. So I wouldn't have expected this kind of vol suck on this kind of move. But I'm not even sure. And my point is, I'm not even sure. I don't think we come in there on Monday, but I'm not sure they've priced out the weekend yet, Andrew.
Oh, well, they got to do. They have to do that a little bit, don't they?
Yeah,
By
well, that's
now.
what I'm saying. I think it's going to come out. I think you might see it come out some more. That's my
Okay.
point. There's my point.
Oh, the UVXY put strike was, I think like 44 or 43 because we're going out a little farther. 43. You could scooch it up to 44, but I think 43 is enough. Because if we see the 20 handle, this thing is 35. That's the bottom line, right? If you get 20 handle in VIX, UVXY is 35.
Yeah.
It's just the way it is, right? But we could get, again, you never know what kind of rally we get for tomorrow.
Monday.
For Monday. 43 is what's going to post, Bob. Other than that, I got to
be
put
around.
out. I got to put out the
The
CME
strategy letter, and I'll
Yeah.
pop on around noon my time to around maybe around 11:30, and I'll have a trade idea for everybody. So give me an hour. And don't forget, and for those of you asking when the